Welcome to the Pump and Dump channel for another weekly update, talking about the usual suspects. Not much to say today really on what's going on, but some things of interest maybe to people who are interested in my channel and follow what I have to say, which is like a handful of people, I guess. Looking at natural gas price, it's looking really bad on the chart here, but we're moving into the January contract, and that's kind of normal that given that the January contract is trading a little bit below the December contract, that we could see, on the tape some downward move that might make people become a bit, a little afraid, let's call it, about the outlook for natural gas, and then maybe that could affect the stocks in a negative way, or depending if you're, of course, if you're trying to buy at lower prices, it's a positive way. But ultimately, I think for the fundamentals, there's nothing changed as to last week. I think whether we go sideways here or whether we go lower, the outcome is ultimately going to be that the higher cost producers, like the Antero Resources and Chesapeake's, are going to have to fold. If we go lower, they'll fold faster. If we go sideways, it will take longer. Is the only thing I can see. Going into next year, of course, when the annual reports come out, it's going to be interesting to see what the impairment charges are, whether the PV10s are changing for the better or the worse, because they do talk about bringing in some new technologies like the electric fracking that CNX Resources has on its web page, talking big about that, thinking that that's going to help improve recoveries or lower costs in any case. So yeah, that's kind of things to look forward to. Getting into oil next, I thought we'd see a pullback where I have this line here, and we just went straight through it. Um, my thinking now is that possibly we have a shoulder here, and we might make a head here and then a shoulder here, and then we can go down to 50, 59-ish, let's say, or maybe here to 57, and yeah, 57, 58. That's the possibility. If you drew a head and shoulders pattern here, we could see that happen. Um, yeah, that's kind of it. If we keep going higher, that would be actually something I would prefer for obvious reasons, because I rebuilt a position in Range Resources today. Basically what it comes down to is my model gave me a positive reading. So at the open I bought at 477, at 471 I bought some more, and at 466 I bought some more again, and then we moved up, and at 476 I sold. I think it was half of what I bought, and the rest I'm holding on to, because I think that it's not exceeding my valuation by a big amount, so I don't need to necessarily sell. I don't see, of course, like I mentioned, the head and shoulders is not clear yet here, and the natural gas price is kind of low, so I think, playing the probabilities, the price here is attractive, so I'm okay with holding at this price here. Next point, CNX Resources. Well, I mean, we had this big move up here. I'm hoping that when we get to January, when the natural gas contract rolls over and shows a lower print, that some people will panic and sell it down into the sevens. If that doesn't happen, then it doesn't happen. But the CNX is really interesting in many ways. If the natural gas price absolutely collapses, I could see CNX go to $2. And if it doesn't, I could see it longer term. If the company executes based upon what I see in the financials as being, maximizing the return for shareholders, not just rolling over debt to keep debt on the balance sheet to pay debt holders a return. If they get rid of some of the debt, I could see their stock trading, 13 to 17, I'd say. Even at current natural gas prices of, let's say, in the 220s to 230s. So that is kind of a possible outcome. We will see what happens. You would think, of course, that with the chart, it was already in the 15, 16 range last couple of years, last 2 years, 3 years, let's say, when natural gas price was much higher. And you would think, like, why can the natural gas price being low like it is now lead to the company improving? And that also comes down to like balance sheet improvements. It's the same thing you have in companies like Tsakos Energy Navigation. When they repay all these preferred shares that they have outstanding, it's going to improve the return to shareholders, and then shareholders will feel, they will feel the appreciation in the shares. So on that note, I thought, because obviously sometimes it might feel like it's getting stale talking about the same stocks and the same things every week, that people might, get a bit annoyed or bored with it. So I thought maybe talking about some other stocks once in a while. But on the other hand, I also think it's really important to stick with the companies and the market sectors that you familiarize yourself with, because what's the point of learning what the valuation or the business of these companies is inside and out, and then you don't apply it on a consistent basis? I mean, I'm not just looking for one trade in and then one trade out, and then I never touch the stock again. I have obviously some other stocks that I've talked about in the past, like Tsakos Energy Navigation, Nordic American Tankers, and Scorpio Tankers. If anyone wants me to talk about those again, I could do that in the next week's video, unless something interesting happens with natural gas and these stocks. I could also talk about some other shipping companies like Safe Bulkers and Diana Shipping, which are in the bulk shipping area. I'm thinking about looking into DHT Holdings, which I thought it's been a great company for many years. It was kind of one of the companies I never looked into more deeply, but I should have, because I could see from what what I looked at, that they were on par with Tsakos Energy Navigation, but they have mostly VLCCs and Suezmaxes, so it's a different beast than Tsakos Energy Navigation, because Tsakos is even more diversified. Then I could talk about some coal companies. If anyone is interested, I could talk about some coal companies. And then on the mining side, of course, there's also some smaller caps like Guyana Goldfield that I covered in the past. I could talk about them again. I could talk about Dynacor Gold Mines, Nevada Copper, Zimarfo Inc. Oh, I could talk about some bigger ones like Turquoise Hill or Lundin Mining. These are all companies that I have looked at in depth, and I have a valuation model for them. I could talk, like, for example, about the Chapada acquisition for Lundin Mining, which I think was a very questionable short-term thing to do, but I see how in the long term it serves the need of the company, but it's not an accretive acquisition as it stands at this point in time, based upon what is known about this mine. So I could talk about that. Let me know in the comment section. Don't forget that any of this I talk about is not investment advice or recommendations for you to buy or not to buy any of the stocks or market futures, whatever I talk about. If you like the content, don't forget to subscribe, and have a good day.